Would you like to be able to live in retirement without spending down your hard-earned savings as traditional retirement planning bases retirement on? In this video, I'm going to share with you how that's possible based on what we did on our income stream wealth building adventure after we stumbled into early retirement around age 50, and we created financial independence by using both traditional investments and also alternative investments that are usually ignored in traditional retirement planning. Now, I want to share with you in this video how most people are planning to live in retirement, how this concerned us, what scared us about this, and what continues to scare me about it. And I want to share with you how you can instead use income generating assets to supplement and or replace those retirement withdrawals so that you can not deplete your money as you get older and you have more certainty of whether you're going to have income for life. I'm going to save the very last tip, most important information for last, so make sure you stay tuned throughout this video. The very first thing I want to do is explain how retirement withdrawals work. I work with clients who are confused about how they're going to live in retirement. Again, I'm not a financial advisor. I'm not giving personal financial advice. I am an accredited financial counselor and a financial coach, but I give unbiased information, just share our story here about what I've learned from personally investing my own money for the past several decades. All right, so the way it works is retirement planning is you work, of course, and invest in stocks and bonds, save as much as you can, and then when you retire, you start withdrawing 4% of your retirement savings a year to live, to supplement Social Security. Okay, so that's how it works. And there have been all these different studies done to see whether or not withdrawing 4% from your retirement account would actually work. And you sort of don't know for sure, because the only way you can, research that, even though we like calculators, and I love calculators, to sort of estimate and use for probability, we don't know for sure because we have to make all these assumptions. We have to assume how much investment return we're going to get in the future over the next few decades. We have to assume how long we're going to live. We have to make assumptions about inflation. So there's all these unknown factors that are way beyond our control, that are influenced and determined by factors beyond our control, like the economy, the stock market, the inflation, the politicians, all these factors beyond our control. So we don't know whether or not it'll work. So first and foremost, we're sort of basing our decision about this 4% retirement plan, withdrawal retirement plan, about unknowns. Okay, so that was unsettling to us. Okay, but I also had, as an early foundation, my parents. All right, and I didn't grow up wealthy. My parents were very frugal. They were Depression era parents. But my dad always took an interest in investing. In fact, I say he was the smartest investor I've ever known. I was very fortunate. He started teaching me about investing before he died from a brain tumor early on. In his 60s. What Dad did, though, was at a time when it was really unheard of, he retired early, and he had to really make a stand to get control of his retirement account so he could invest it himself and not be dependent on the company that managed the company he worked for, retirement accounts, right? And what he did is he saw an incredible opportunity in municipal bonds. Now, this was about 1980, and Dad was able to buy a portfolio of different municipal bonds that were yielding, if you can imagine this, up to 25% tax-free. And he was able to buy those bonds at deep discounts because interest rates and inflation were so high that we think that what's happened lately is going to keep happening. That's called recency bias, and that's what we do with our investing. But my dad was able to go, wait a minute, this is crazy. 13% inflation and these high interest rates, they're not going to last forever. And he used to like to say the last thing to go out are the lights. So I guess related to that was the water be cut off, because some of the municipal bonds he bought were water, and they were related to utilities. And so he loaded up on that because he saw that this surely has to revert back to the mean, as I like to say. It's got to go back to that average, right? It's got to go below that average in order to get back to that average. And so he bought those bonds. And what happened as a result is my parents were able to live off the income from the bonds without having to spend down their retirement savings, which is the way that people retire. That's the traditional retirement model. And so I've always kind of had this in my mind. Now, even though I took classes to be a financial planner, I didn't want to go that route. But I took the courses. I've learned all this stuff about investing all these years. I love it. I'm a nerd around it. And I knew that the retirement model, it was still back in my brain when we were, after we stumbled into that early retirement I mentioned, in late midlife. My husband's a little older than me. And I said, I don't think we can live off of our investment income. And I think we need to look at alternative investments and what should we do. And my husband's an oil expert, and we ended up buying oil partnerships and et cetera, et cetera. But my point I want to make is we made a decision, a commitment to buy income generating assets instead of just planning on making those 4% retirement withdrawals eventually. We weren't old enough to start doing that yet. But we looked ahead to say in 10 years, 15 years, that's not what we want to do, right? So let's get some things in place, and hopefully they will continue on, and we'll be able to do that instead of having to spend down our retirement accounts that we've saved over the years, because we may run out of money. Not only that, if we get these income generating assets going, we can let those ride us into our 70s, well into our 70s. And if we want to cut back, because it does take effort to manage these income generating assets, then we can make retirement withdrawals a little bit later in life. Who knows? A lot of people have family members that they want to leave money to, or maybe there's a charity. So there were many reasons we didn't want to spend down, and a lot of people, most people don't want to spend down their retirement savings, but they feel like it's the only option. It's not. Income generating assets, investing in income generating assets as a priority can allow you to live off your investments instead of spending down your investments with those 4% retirement account withdrawals that are so popular now, that are the standard in traditional retirement planning. Okay, one more reason this is so important is because there's something called sequence of returns risk. I started to say recency bias, but I already talked about that. Sequence of returns risk. And what that says is that if we go through a bear market, if you go through a bear market just before or just after you retire, guess what? The likelihood that 4% retirement plan that you had all mapped out, the likelihood of that working decreases considerably. Okay, well, here we are back to something way beyond our control, determining whether or not we're going to have enough money to live for life, right? And who wants that? I didn't, and you probably don't either. Now, the last thing I want to mention that's so cool about when you create or purchase these income generating assets, you can make a decision to maybe withdraw just 1% or 2% and then have that extra income come in to get you up to 4, 5, 6%, whatever it is you need to live every month, to live the way you want. Or you can wait, like I was saying, like we've decided to do now. We're very fortunate that we've been able to defer withdrawing from our retirement savings because we've created these other income streams. There's a lot of different ways you can generate income from assets. You can create assets, as I write about in my Rise Wealth Plan that you can grab. I'll put a link below. Or you can buy assets. It depends on how much capital you have and how you want to invest, how much risk you want to take on, and all that. If you found that helpful, I think you'd like this video, so be sure to watch it next.